Welcome to this video, which we're going to talk about the reality of prop firms, what are the pros, what are the cons. We're going to talk about the important things which you need to know. Now, first thing that I want to mention before I begin with this whole explanation is that if you want to join the Discord, feel free to do so. The link is in the description, so you can check that out. Also the website, you can check that out as well. First thing which we're going to talk about is to clarify the difference between a prop firm and a funding company. Now, the prop firm, an example for prop firm is, let's say, Axia Futures. Axia Futures is an office-based company which is trading with real money in London. They have an office, you can go and visit them, you can go and say hello, have coffee with them. And a funding company is, let's say, FTMO or My Forex Funds, which they don't exist anymore, My Funded FX, Funding Engineer. These are the good examples. Well, maybe not the good examples, but examples for funding companies. Now, let's clarify what is going on with the funding industry. Recently, My Forex Funds was destroyed, literally destroyed. And after their demolishment, a lot of people started changing their websites to virtual funding and virtual payouts, etc. Is it going to help them or no? Who knows? Is the funding industry going to fail? I don't think so, in my opinion. Maybe there's going to be regulations in the US and Canada and UK, but the rest of the world, in my opinion, is going to be completely fine. And if you want to trade for a funding company, I advise you to take a company which is not based in the US, or if it's based in the US, make sure that they have a very low probability of having issues with, let's say, the Security and Exchange Commission or anything like this. Any financial or regulatory agency, to put it that way. I'm just mentioning the SEC, then they don't deal with funding companies, but you get my point. Now, what is a payout? A payout, basically a payout from a funding company. Once you pass challenge phase 1, pass challenge phase 2, you come to virtual trading. Before it was live trading. Now it's virtual trading. Now, once you get profits on the virtual trading, you get a payout and money coming into your bank account. Where do this money come from? The money actually comes from people who fail challenges. All these funding companies, none of them actually trade with live funds, to put it that way. Everything is with virtual funds. There's nothing wrong about that, but in my opinion, you should be aware of this. Now, is there something bad if you get a virtual payout? No, because if you get money, if you get payout, money comes into your bank, so it doesn't matter if it's virtual or live. In the end of the day, you make profits, money comes into your bank. There was something about get them slipped to hell by My Forex Funds. I've seen the conversations between the people that actually worked there. One of the things they said was slip them to hell, this payout is too big, blah, blah, blah. Now, even if this happens to, let's say you manage multiple companies, you manage multiple accounts, even if this happens to you, even if the firm that you're trading with fails, if you're a profitable trader and you make money from their virtual trading, why do you even care? Why do you want to bitch about it? In the end of the day, if you're profitable, you should not really care if one company goes to hell. Because that's doesn't more, let's say Funding Engineer, it's in UAE, it's in Dubai. Like, who's gonna go there and tell them something? People go in Dubai not to get extracted to, let's say, Europe or US, they get hideouts in Dubai. There's no funding company that's gonna fail in Dubai, in my opinion. Funding Engineer is a legitimate company. I'm gonna max you out, Funding Engineer. I'm just telling you now. Now, something else that you need to be aware of about funding companies is about the rules. When you buy a challenge, always check the rules, because some of them maybe not gonna offer you weekend holding, some of them not gonna offer you news trading, some of them want another specific things from you. But wherever you go, read the terms, read it before you buy it, because what happens often, people buy it, they don't realize things, they don't even see the slippage on the account they're buying from. Check the slippage you're gonna buy, check the broker. Let's say, for me personally, just an example, I am trading Bitcoin most of the time. I want good slippage on Bitcoin. Whenever I buy a challenge, I'm gonna go check on the demo, let's say think markets or 8 cap, I'm gonna go check the slippage, and if the slippage is okay for me, I'm gonna buy it. That's it. No need to overcomplicate things, because let's say for Bitcoin trading you need low slippage. You cannot afford $40 slippage or $50 slippage. It's unrealistic in my opinion. The slippage which you should look for Bitcoin is about $15, more or less, $2-3 on top, maximum. Anything above 20 bucks slippage on Bitcoin is scam, in my opinion. And the reason for this, and why I'm telling you this, is because let's say you're trading Bitcoin, most of the time, about 90% of the brokers, they don't actually charge you any type of fee on trading Bitcoin. They just take the slippage as fee. So it's completely fine because you're not paying fee. So yeah, be aware of these things. Always read the terms before you buy a challenge. And the reality of prop firms is the following: they're saying that they want you to win, they want you to make money. In the end of the day, it's all marketing. If you're profitable, you're gonna make money. If you're not profitable, you're gonna lose money, and that's the way it works. Prop firms, they're not gonna carry a challenge for you. Even they have some of them. I think my Forex funds was one of them that actually had market updates or something like this. Even these things, you should not really care about it, in my opinion. Because it's the same thing with exchanges. Exchanges, the way that works. Exchanges make money if you're liquidating someone. Or, I don't think it's that stop loss. Stop losses don't make money for the exchanges, but liquidations do so. And a lot of the time there's gonna be places and specific things that actually happen on exchange just to get liquidated a bunch of people. I'm not gonna mention names. I don't want to get into wars with any exchanges out there. But you get the point. Exchanges make money from people buying and selling, e.g. the fees, or liquidating them. These are the ways that exchanges make money. And the same thing with prop firms. It's a legitimate business model, in my opinion. If you're profitable, you're gonna get the payout, you're gonna make the money. But if you're a losing trader, as 95% of people are, you're gonna lose money. And in the end of the day, you should educate yourself first before diving into prop firms, in my opinion. Be profitable on demo, be profitable on demo accounts, own money, then jump into prop firms. Simple as that. A lot of things are very simple. We as people, we overcomplicate them. And in my opinion, the more simple something is, the less likely to fail it is. Do simple things, get good results. It's a life policy. I should start a live series, in my opinion. But I'm gonna talk about this in a different episode. Anyway, that's it for today. Thank you for joining me. Thank you for talking with me about the subject. If you have any specific theme that you want me to talk about, drop a comment. We're gonna talk about it. See you.